This is very good perspective. Managing an Islamic bank is very, very different from managing a conventional bank. And then, I think that this is a point we will come back to. It goes to the board of directors, shareholders. I think that this is very, very important, given that probably in Oman, for some time, the Windows model would be very popular. So of course, we have a fully fledged Islamic bank already, and we hope that there will be some other applications as well for fully fledged Islamic banks. But many other conventional banks, they have either they are going to start very soon their Islamic operations, or they have very strong intentions of starting their Islamic windows. And the management of those windows would face a lot of issues, because the culture within the organization would by and large remain conventional, and these Islamic managers would face a lot of challenges. Muhammad Amin, what would be your 2-minute statement?
Assalamu alaikum.
Salam.
Let me be maybe slightly controversial.
Okay.
A fully fledged Islamic bank is a bank. What makes it Islamic is that it also operates in accordance with the Sharia as interpreted by its Sharia Supervisory Board. What that means is that the Islamic bank faces all the same pressures and challenges as a conventional bank in terms of funding, customer segmentation, what area of the market is it going to operate in. And Rodney before gave us a list of the types of banks you get in the conventional space: retail banks, private banks, investment banks, universal banks. And I would expect to see all of those models replicated in the Islamic space, depending upon the marketplace available. So if you look at the United Kingdom, the retail market is tiny. There is one retail Islamic bank in the UK, but London is a great place for investment banking, so there are 4 Islamic investment banks. On top of all of the commercial pressures faced by conventional banks, as Khalid has just explained, there are additional complications that arise from being Sharia compliant, which make it more challenging and more difficult to be an Islamic bank. But fundamentally, I would expect the Islamic banking industry, in terms of business models, to look almost identical to the conventional industry once it is mature.
Thank you very much. I think that this sets the stage, and I would emphasize, if you have any questions, comments, statements, and you want to share with us, that would be very good. Actually, I would welcome the participation from the floor. David, you mentioned your involvement as a manager, as CEO of one bank, which was predominantly owned by non-Muslim shareholders, and then your experience of working for a bank which was predominantly Muslim-owned bank. What were the major differences between the two? Given that the two banks, of course, this will be a Malaysian context, but we can draw some lessons from this experience. So both the banks, they are in a country. One bank's shareholding is predominantly, probably 97% as non-Muslim. Other is another Islamic bank, but majority of its shareholding is Muslim. So what kind of challenges you faced when you were managing an Islamic bank owned by non-Muslims?
Thanks for that question. There were several challenges, but there were also several similarities, and let's deal with the similarities to start with. Both boards put enormous pressure on results. Didn't matter whether they were Muslim or non-Muslim. And both boards needed a little bit of work done with them to help them understand that we couldn't be, as Rodney was describing, actually a bank that did all of that list, and that we needed to be a little bit more focused in terms of strategy. But in terms of the main difference was certainly around Islamic values or around Sharia. With the non-Muslim group, whilst they paid a great deal of attention to Sharia in the sense that they recognized its importance, they didn't really understand it. They didn't have the background, they didn't have the frame of reference with which to comprehend it fully. I would not say that the Muslim board was totally aware of everything in Sharia, but it was certainly much more aware of the fundamental understandings of the direction of Islam in terms of ethical values and so on. So the biggest challenge I had was the conceptual understanding of certain products or the way in which we viewed risk. I recall very well the chairman of the bank that both Khalid and I were engaged in, and this was before Khalid's time. We had a major issue in terms of pricing and our margins, and he decided to shut down part of our business for a while because he did not understand that predominantly in Islamic finance you have on your asset side financing which is largely fixed rate or capped, and on your liability side you had deposits which got a flexible return in terms of profit sharing, whereas his conventional bank was completely the opposite. In other words, you had fixed deposit rates that you were paying, and you had flexibility with a margin on top of base lending rates in order to recover that. And the concept of that being completely the opposite took him about 6 months to grasp. And after he grasped it, 6 months later he turned the tap on to say you can start this business again, but of course he expected the same result. So I'd lost 6 months of business there. But I think the biggest differentiation was that there was no grounding in Sharia and understanding the fundamental concepts. That was the biggest issue that came up.
Excellent. Khalid, because now you have a similar kind of experiences as well. A bank predominantly owned by Muslims, RHB Islamic, then another bank which was not owned by Muslims, then another bank owned by some shareholders in the Middle East, working in Malaysia. What were your challenges?
The first bank where I went in was a window being transformed into a standalone bank. So you had great difficulties in trying to educate that you are taking out, along with the window, certain resources. Because the parent bank thought, you take the window assets out, but you don't take the liability out, leave the liability behind for the conventional bank, which doesn't work because how do you fund the asset? So those are the kinds of challenges that go through. When David and I worked for the Chinese bank, he didn't mention it, but we had a bigger challenge. This is a bank which is owned by a Chinese gentleman whose only leisure is going gambling. So how do you explain to your customer that you are owned by a chairman who only goes to Las Vegas once a year and blows money? It was common knowledge. It's not anything secret. And then trying to convince your Islamic customer that it's okay, you're taking my money, that's fine, but don't worry about him. It is a challenge. And that is not the kind of challenge that you will face in Oman, because such things don't happen in Oman. Or that's not the kind of challenge that you will see in the Gulf, because you have mostly Muslim majority banks in there. But where you have this aspect of it, it is tough to try and sell your products to very conservative Muslim customers in there. That's one challenge that comes in. Dawood also mentioned about the cannibalization. Now the cannibalization also earlier in your other session you talked about the cannibalization issue. The moment you set up a window of a dominant conventional bank, which is what happened this afternoon here, you have this great contention of resource allocation and great contention within the bank management at the board level and down of this, why should I give resources to the Islamic when its return is lower than the conventional bank? They forget that the conventional bank has been there for 50 years or maybe 40 years, and the Islamic is only yesterday, and therefore the cost to develop and deliver product is much higher in the Islamic. The cost to educate the customer is much higher. The cost of delivery is much higher because you have to go through the whole network system in there. And therefore, the contention becomes a very big issue of capital allocation. I, the chairman, can see that the conventional will make me 15% return on equity, you Islamic will only make me 5% return on equity, sorry, I will give the capital to the conventional. Those are the kind of contention issues that come in, no matter how good the intentions are. That is one of the great difficulties of the window model that I have seen, and I've seen it for a long time in there, where you have this difficulty in there. Now it gets worse if you have the common directors. If you have the conventional bank directors also being director of the Islamic, you have a disaster. Because to them, it's a zero-sum game. Well, you don't make it, they will make it. So to me, it makes no difference. Your returns are no good. I'll give it to them because at the end, my returns are fine. Those kinds of problems are very, very difficult problem to grapple with. And that can frustrate the management as well as the team that is out there marketing. Because you're now no longer competing against the outsider, but you're also competing with your inside sister. And the big sister is big because it knows the customer, has all the resources, has the delivery mechanism, and you are just a stepsister. So that is a bigger challenge.
I think that this gives a very strong message. You know, when you're working within a conventional framework, there are definite limits to growth. You cannot grow beyond a certain point. But if you set up a separate shop, a separate Islamic bank, you know, all those challenges which are related with trying to manage the conventional side, they are not there. So this I think, okay, this is a very interesting lesson for a country like Oman, which is trying to develop its Islamic franchise at a very, very initial stage. Of course, even in the previous session, there was a diverse opinion. You can have fully fledged, you can have Islamic windows and so on. But you know, those who are going for Islamic windows, okay, they must understand that there are greater challenges in managing Islamic funds within a conventional framework. Are there any questions from the floor?
My question are, how much competitive in terms of cost benefit analysis are Islamic banks compared to non-Islamic? Second is, you missed this point in the previous session also, that what are the present and future sustainability as well as feasibility of Iranic and Sudanese Islamic banks?
Okay, thank you.
We have not heard
right.
Iranic and Sudanese cases in the previous session.
I allowed one question, you came up with two. The first one is an easy one. You know, where do Islamic banks stand in terms of their cost effectiveness, cost benefit analysis the gentleman has referred to as compared to conventional banks? I think Khalid, you have already touched upon, even if you could kindly elaborate on that one.
Islamic banks, once they reach a certain scale, and economies of scale are very important in this matter, can compete head-on with the conventional banks without much of a difficulty in there. Within the Gulf, you can see now that in some markets, the Islamic banks are in fact much more competitive than the conventional banks in terms of pricing, in terms of product delivery, in terms of service quality. So it depends upon in which economy you are and where does the Islamic bank stand in the overall picture of that economy in there. If you are in an economy like in UK, Islamic Bank of Britain has maybe 0.0001% of the market share. There is no way that it can compete with Lloyds or Barclays or RBS. There's no way, because it doesn't have the efficiency, it does not have the funding ability, it does not have the distribution. So that it's unfair comparison for that. But if you look at it and say in Dubai Islamic Bank competes with National Bank of Dubai with no problem. If you look at it in Abu Dhabi Islamic Bank competes with Abu Dhabi Commercial Bank head on without much of a problem in there. In Malaysia, where if you look at it, the Islamic banks today compete head on with the conventional banks on the retail banking side, on the wholesale banking side, and on the investment banking side. In fact, in certain areas, the Islamic banks have a greater market share than the conventional bank, like in the Sukuk market or the debt market. So the ability to compete is there, but it is a reflection of where you stand in the economic cycle in that country.
It's very good. Probably Professor Wilson, you would like to add on it especially the second question, the development of Islamic banking in Sudan and Iran, where do they stand?
Indeed, I'll deal with both. Maybe first of all, if you're comparing Islamic banks with conventional banks in terms of performance, one way of doing it is basically to look at what, if they're listed on the market, you can look at what's actually happening to the share price and also the share price volatility, which gives a measure of risk. Now, there have been some studies done on this. If you compare NBK, for example, in Kuwait with KFH, Kuwait Finance House, which is an Islamic bank, you'll actually find that in terms of share price volatility and returns over, obviously there's always arguments about empirical evidence and so on, but on the whole, KFH comes out pretty well actually, if you take the last 20 years, for example, of its existence. Similarly in Qatar National Bank versus Qatar Islamic Bank, both quoted institutions. Again, you can make that comparison. Saudi Arabia, Al Rajhi is a listed bank, so again, you can make the comparison. So there's actually quite a lot of scope for work doing this kind of comparison, and indeed, potentially interesting topics for PhD students, indeed, to work on this kind of thing. In terms of Iran and Sudan, I must admit I know less about the Sudan, but Iran, I did look at it recently. It has to be said in Iran, the entire financial system was Islamicized back in 1983. Most of the large banks in Iran are state-owned, and because there's been quite a lot of, if you like, state direction in terms of how their funds are allocated, they're pretty unprofitable. However, in the last 10 years, we've seen basically a rise of private banks in Iran, and that's quite interesting because some of them seem to be more successful. As I said, they're all Islamic, but essentially you've got different types of banks in Iran, so there's quite a lot of variability. Sudan, of course, also Islamicized its banking system quite a long time ago. But of course, Sudan suffered from many problems, not least to two countries as opposed to one, and they lost a lot of their oil resources. So clearly, banking in general is not doing that well in Sudan, and Islamic banking has